Compensation management, strategic perspective. We all know a strategic perspective on compensation focuses on the patterns of compensation decisions that are critical to the performance of the organization. Compensation strategy needs to assure that compensation practices are in line with overall business strategy and human resources management philosophy. In this lesson, we will define the compensation strategy for attracting and retaining employees, explain the compensation for flexible workforce, define expatriate compensation, and explain deferred payouts and retirement benefits. After going through this presentation, you should be able to define the compensation strategy for attracting and retaining employees, discuss the role of compensation in creating high-performance employees, explain the compensation for flexible workforce, define expatriate compensation, explain ESOPs, understand deferred payouts and retirement benefits. An enterprise endeavors to recruit and retain the best people available. One of the ways of attracting and retaining the best and the brightest is to pay more than what they would get anywhere else for similar skills and levels. If organizations want to attract high performers and retain and motivate them, they have to be willing to reward excellent performer highly. This requires abandoning traditional pay structures and practices in which the best performers are paid only a little more than the average and below average performer. Some firms endeavor to be wage leaders. Multinational companies operating in developing countries usually pay much higher than the indigenous firms in both private and public sectors. Creating reward systems that focus on excellence and treat employees as human capital investors requires a major change in the way most systems operate. Reward system generally treats employees as job holders and how well they perform their jobs. Viewing them as human capital investors suggests a different approach to rewards in two respects. 1. It suggests basic reward on the value of human capital that people bring to the organization. What their job is at a particular moment is much less important than the value of their knowledge and skills. 2. It suggests rewarding people according to how effectively they use their human capital, their knowledge, skills and competencies to help the organization improve its business performance. Sound compensation or reward system brings amicability and peace in the relationship of employer and employees. The system brings the best out of every employee in the organization. It aims at creating a healthy competition among them, and as such encourages them to work hard and efficiently. The system provides adequate opportunities to those who wish to perform better. The system provides growth and advancement opportunities to the deserving employees. The system upholds the principle of equal wages. It provides transparency and parity too. The perfect compensation system provides platform for happy and satisfied workforce. This minimizes the labor turnover. The organization enjoys the stability. A sound compensation system helps the organization keep pace with changing environment. It helps the organization to cope up with the wage levels in neighboring industries. The organization is able to retain the best talent by providing them adequate compensation, thereby stopping them from switching over to another job. Sound compensation system minimizes the complaints from the employees, provides them the congenial work environment to perform better and set up for them the targets to be achieved. A flexible work plan is another type of employee benefit that has been proven to have a positive influence on employee productivity, attendance, and morale. A flexible work plan allows employees to adjust their working conditions within constraints set by the company and may include such options as flex time, a compressed work week, job sharing, and home-based work. Flex time involves adjusting an employee's daily time schedule. It can be as simple as allowing a worker to come into work an hour earlier and leave an hour earlier than the normal 8 to 5 workday. Job sharing allows two or more people to divide the task of one job. It allows the same consistency as a full-time person because the work is simply divided among the people who share the job responsibility. Home-based work programs allow employees to perform their jobs at home instead of an in-office setting. Establishing a compensation plan for a job in a foreign location begins with the determination of base pay. The market or going rate of pay for a comparable job in the home country in the time of expatriation is normally used for setting this rate. After setting base pay, the determination of a foreign service premium (FSP), which is an incentive bonus for performing the assignment in the host country. The FSP usually is expressed as a percentage of base pay and is part of the total pay received by the employee. There are five basic elements in a typical expatriate's compensation package. These include basic pay, benefits, allowances, incentives, and tax reliefs. Basic pay is the amount of money that an expatriate normally receives in the home country. About one-third of the compensation is benefits. In case of expatriates, it can be more, but a number of questions arise which requires to be addressed whether MNC should maintain expatriates in home country benefit program, particularly if these programs are not tax deductible, which country should pay for the benefit. Allowances are expensive features of expatriate compensation package. It involves payment to compensate for differences between home country and foreign countries, especially inflation differences. Hardship allowances are given to expatriates to work in hazardous area with poor quality of life. In recent years, some MNCs have also been designing special incentive programs for keeping expatriates motivated. Taxation causes most concern to MNCs. Tax equalization is the most commonly practiced tax relief policy of MNCs. Some companies require to execute agreement with the company before proceeding overseas site for not leaving service while abroad and serve a certain period of time on return. Stock options are opportunities to buy stock at a set price immediately or sometime in future for a stated period. Stock option plan is one of the two forms of variable pay compensation package, other being profit sharing bonus. In the year 2000, there were about 10,000 companies which had ESOP, covering about 10 crore of employees. The important companies which had introduced ESOP are Infosys, Wipro, Godrej, GE, Procter & Gamble, Global Trust Bank, etc. ESOPs are becoming popular in view of various factors. These are the shift from industrial to information revolution. Knowledge workers expect say and stake in the organization in which they work. Public policy in many countries favor giving employees a share in equity and profits. This is pursued in a few countries through legislation, and in some others it is encouraged through voluntary persuasion. And in the wake of disinvestments and privatization of public enterprises, employees are offered shares with view to ease their opposition. It is apparently to give them a stake. This is also considered as an effort as redistribution of wealth. Deferred compensation is an arrangement in which a portion of an employee's income is paid out at a date after which that income is actually earned. A retirement plan is an arrangement to provide people with an income or pension during retirement when they are no longer earning a steady income from employment. Retirement plans may be classified as defined benefit or defined contribution, according to how the benefits are determined. A defined benefit plan guarantees a certain payout at retirement, according to a fixed formula which usually depends on the member's salary and the number of years membership in the plan. A defined contribution plan will provide a payout at retirement that is dependent upon the amount of money contributed and the performance of the investment vehicles utilized. In a defined contribution plan, contributions are paid into an individual account for each member. A traditional form of defined benefit plan is the final salary plan, under which the pension paid is equal to the number of years worked, multiplied by the member's salary at retirement, multiplied by a factor known as the accrual rate. A pension is a steady income given to a person, usually after retirement. Pensions are typically payments made in the form of a guaranteed annuity to a retired or disabled employee. Now let us check if we have understood the various concepts discussed in this lesson clearly. A retirement plan is an arrangement to provide people with an income or pension during retirement when they are no longer earning a steady income from employment. Right or wrong? Right. A stock option plan is a steady income given to a person. Right or wrong? Wrong. In a defined contribution plan, contributions are paid into an individual account for each member. Right or wrong? Right. Before we end, let us briefly revise what we have studied so far. One of the ways of attracting and retaining the best and the brightest is to pay more than what they would get anywhere else for similar skills and levels. If organizations want to attract high performers and retain and motivate them, they have to be willing to reward excellent performers highly. Compensation or reward system play a vital role in the business organization. Proper compensation system can ensure increased productivity, employee satisfaction, and congenial working environment. A flexible work plan allows employees to adjust their working conditions within constraints set by the company and may include such options as flex time, a compressed work week, job sharing, and home-based work. There are 5 basic elements in a typical expatriate's compensation package. These include basic pay, benefits, allowances, incentives, and tax relief. Stock options are opportunities to buy stock at a set price immediately or sometime in the future for a stated period. Deferred compensation is an arrangement in which a portion of an employee's income is paid out at a date after which that income is actually earned. A retirement plan is an arrangement to provide people with an income or pension during retirement when they are no longer earning a steady income from employment.